Hi guys, this is Dan from the Investment ABC, your guide to financial freedom. And in this video, I want to talk about Lucid Motors. Unfortunately, I don't have currently too much time to quickly post a video when I buy a stock, but I have bought CCIV Churchill Capital Corp 4, which is rumored to merge with Lucid Motors at around $14.50. Until now, the merger is just a rumor, but in my opinion, chances are very high that the deal will get closed. I'll give it a 90% probability. There are a couple of reasons for that. The first one is that CCIV is a big SPAC with 2 billion in cash, so that the target must also be a big company. There aren't too many SPACs with this kind of size. Rumors say that Lucid will be valued at 15 billion US dollar. Furthermore, the CEO of CCIV, Michael Klein, who used to run Citigroup's capital markets division, served as an advisor to Saudi Arabia's sovereign wealth fund. Guess who is Lucid Motors' biggest stakeholder with 67%? Yes, Saudi Arabia's sovereign wealth fund that gave Lucid over 1 billion US dollar to build their factory in Arizona. Another hint for the merger is that Andrew Liveris sits on Lucid's board of directors and is part of Churchill Capital Force operating team, and that former Ford CEO Alan Mulally is also working for CCIV. Lucid Motors also started to look for investors' relation roles as well as an SEC reporting manager. That shows that the company is interested in going public soon. Since the Lucid Air, the luxury sedan, will be produced this spring, it makes sense to go public before spring, so there is not much time left. Since an IPO is more complicated and has more regulations, it would take more time to go public than with the SPAC. These are all a couple of smaller tales which are adding up, but in my opinion, the biggest tale came from Michael Klein's ICR investing conference this week. I've watched this interview and I'm very certain that they are in talks with Lucid Motors. If they weren't talking with Lucid Motors, he would just straight out deny the rumors and kill it before it gets out of hand. Instead, the moderator said, quote, "He, Michael, is in a difficult position and cannot address the rumors at all." Furthermore, Michael is talking about the mobility space in minute 33 of the interview, and what he says is fitting perfectly to Lucid Motors. Just hear for yourself.
I want to ask a big picture question if I can. So going back to 2018, the first Churchill SPAC, you didn't see as much action in these pre-revenue companies. These days, electric vehicles, space exploration, that sort of stuff is all the rage. How do you feel about that when you're looking at a company that might make a whole lot of revenue 2 years from now, but is still just ramping up? Is that the sort of target that you guys are interested in? Or, from what you've been describing to me, you're very careful about these working financially. What's your view on both that shift happening in general in the SPAC market and whether or not you guys are interested in owning something like that?
Sure. Listen, we're looking at companies throughout the entire life cycle, from very early in their development to very later in their process of being leveraged buyouts and needing deleveraging to grow. We had the benefit of being able to, on Skillsoft, use a debt restructuring to eliminate $1.5 billion of debt before we even touched the asset. We drove that for our own benefit, and the company partnered with us in doing that. But we look at the whole life cycle of companies, and what we stick to fundamentally is, one, companies that should be public will take public. You can't bring a quote company that should always be private into public. It has to have tailwinds in the industry sector. It has to be a growing company organically and or have the ability to grow inorganically. We have to have great trust in the management and leadership. We have to have operating partners, and we have many operating partners that have great knowledge of those areas of great growth today in mobility as well as in other areas. We have within our camps 11 technology executives ranging from Sam Altman, who ran Y Combinator, and Imran Khan, the chief strategist of Snap, to Bill Vechte, who ran Windows, and Alan Mulally, who's a phenomenal engineer and turned around Ford. So we're looking at all kinds of high growth companies. We need to have conviction because it's our capital. because we have a higher hurdle rate, because we hold it long enough. And what we've told our investors in our recent capital raises is we don't want to invest unless it has at least enough growth to be called, quote, GARP, growth at a reasonable price, as a message. And in addition, we won't go beyond, from a growth perspective, those companies that we don't believe the technology has been proven yet. From our perspective, it's not our job to take a technology-proof bet. That's not what we think is appropriate for the public markets. And I do think some of the SPACs that are out there who will be taking a bet that is much more binary on technology, that's an area of risk that investors, I think, are not expecting, because venture capital, as you know, has a portfolio. If you have 20 investments, 3 of them may be home runs, and 10 of them may be really bad, and 7 may be okay. But that portfolio math means there's whole sectors in mobility in particular where many of the companies just will not have the technology to be the replacement in short distance travel or air travel or go through it. But there will be winners, and there will be very big winners. And if we believe in the company, if it's proven out its technology, if we believe in the management, if we believe that we can set it up at an appropriate value for investors, if we believe we have operating partners that can drive value, and if we believe in the company, we'll make that investment.
We will see in the next 1 to 2 weeks if the rumors are true or not. I have taken a position in CCIV because I think it is smarter for Lucid to go public before the production of the Lucid Air in spring. In the luxury segment, you can sell better your cars if you get the publicity around your company going. Going public will create more brand awareness among rich people on Wall Street and investors. These are the target market for Lucid Motors, and they don't need to sell too many units to gain significant revenue. So it wouldn't be smart not to use this opportunity. Furthermore, we can see that many investors will hold a good company like Tesla or NIO for a long time and support their investment wherever they can. Since Lucid followed most of what Tesla did, I'm sure they will also try to establish a huge investor following. Going public via IPO takes more time for Lucid, and they don't have too much time left. If the company wants to go public before spring, the only choice is via SPAQ, and there are not too many SPAQs of the size of CCIV. In my opinion, Lucid is one of the very few EV startups that can survive the initial ramp-up phase as a car manufacturer and be serious competition in the long run for Tesla. Unlike many of the other EV companies popping up, and which many of those will 100% fail, Lucid has enough capital backing behind it. Like I said before, the Saudis invested $1 billion into this company, and when things turn sour, they will most likely reinvest a couple of billions more. It is the Saudi pride and mentality not to fail here. Furthermore, the company has excellent and experienced management. The CEO, Peter Rawlinson, was the former chief engineer of Tesla's Model S program before leaving that company nearly a decade ago. He seems like a really nice guy that has assembled a great team. He also hired Tesla's former manufacturing executive Peter Hochholdinger in 2019 and many other Tesla employees at many levels throughout the company. Peter Rawlinson is experienced and knows exactly the problems Tesla was facing in the early stages, and hopefully he will avoid the same mistakes Tesla did. Lucid Motors' first car, the Lucid Air, will be mass-produced this spring in its factory in Casa Grande, Arizona. The company wants to go the same path as Tesla and start in the premium segment to earn sufficient revenue to finance its other cars. This approach makes total sense since you don't need to produce so many cars in the beginning. The car is really beautiful and has the highest range among any EV on the market with 500 miles of range. It is more compact than an S-Class, for example, but has the same space inside. And furthermore, its trunk is huge. Lucid Motors is not only a car company, but also a battery manufacturer. The company is producing the batteries for Formula E, and the same batteries will be used in the Lucid Air. Producing your own batteries will give the company higher margins and quicker profitability. The second car and SUV will be produced in 2023. Overall, I think Lucid has a good chance of being successful in the future. My strategy with this SPAC is going to hold until the rumors are confirmed, and the stock price most likely will take off and settle between $26 to $34, where I will take partial profits. I will leave another part as a long-term hold in my portfolio. This investment is a pure gamble based on rumors, but it was a calculated risk buying at $14.50. Even if the merger is not happening, I'm sure CCIV will merge with another good company and the downside risk is limited. If you like this video and think the merger will go through, hit the like button to support the channel, share this video and comment. At last, check out some of my stock picks and subscribe for future ones. Bye guys and see you in the next one.